Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, everyone, we're about a half hour after market close on Monday, August 16th. We're going to take our daily look at SoFi. And I had to restart the video, unfortunately, so what I was saying in the previous video, which now you're seeing as a blank chart, but I had said, it couldn't hold the bounce zone that was placed just above 1465 previously, all of this bouncing that it had held here previously, and so I had deleted the chart. Then we froze, and so now I'm having to restart, and I can't get that drawing back. I'm not going to recreate it. So anyway, just take a look at any of the old videos if you want to see that chart in play. But I think it's worthwhile to go ahead and sort of create ourselves a new chart, look for where some catch zones, some support zones might be, and then we'll do that, and then we'll flip over to some of the data and look at some of the data that's come in and some things that have adjusted since we last spoke. Now today we see volume picking up about almost 26 million and down over 4.5% today. So we see that selling pressure coming in much like we did back here when that initial lockup ended, because we know that there was an additional lockup that sunset 2 days after earnings, I believe was what we got guidance-wise from General Counsel, and as well as an insider email that I had shared previously that had indicated that exact same timeline. So those things lining up, plus the kick up in volume today and it being sell volume, seem to align with what we saw previously when similar situations occurred. That said, before we get too far ahead, I would note that there was very limited outflow of large-scale orders today. And even then, that's basically because it was nearly offset by large scale orders coming in. So the inflow nearly matching the outflow. They basically cancel each other out. So to me, we know, if you've been watching these videos for a while, we know how large scale orders have just sort of stayed out or have been placed in the outflow bucket. And so large scale orders staying out, meaning that there haven't been any institutions seemingly buying in, coming in to help support and provide that buying pressure for SoFi. Now, there is, of course, always the possibility that these don't actually provide much buying pressure because they could be effectuated in dark pools, which we've talked before. There's a video that I did on SoFi dark pool activity. But that said, they're still consuming large quantities of the stock, and if they're holding them, then they're at least not re-entering the order flow, at least anytime soon, as a bunch of sell orders hitting the public market. So to me, still a really good sign. And I guess to the extent that folks are really bought into the idea of quote unquote smart money, getting into SoFi to, I don't know, maybe make them feel as though they're buying into SoFi or whatever is, additionally then buoyed. There's that sort of psychological aspect as well. So I do see potentially, this feels like a little bit of an outlier. This feels like just a hopeful kind of scenario. But this 1414 that we saw before, this was that initial run-up that we caught with IPOE in the hype and the short squeeze when it transitioned over to SoFi. We've come down all the way to that. So all of our pre-hype, pre-squeeze gains that were leading up to SoFi have been erased at this point. And the wick from today's candle just about stretched there. It says today's low is 1418. So you don't ever anticipate these things to be exact penny for penny, but the degree to which they're within a fraction of that space, sort of consider it that zone. Now here on this date, this wick stretched up to 1394. So these are all within sort of striking distance in my opinion, but these are just wicks of candles on the daily chart. And so I don't know that that would actually provide enough support in order for it to continue to hold here. I mean, at some level, from a purely subjective point of view, I still don't think that this reaction that we're seeing to the earnings that came out is warranted. Now, the flip side of that is it doesn't matter, right? It doesn't matter if I think that it's warranted or not. The market is doing what it's doing, and just have to have some basis in reality and say, even if I think that this is a really stupid overreaction, it may not matter. I mean, I had a similar reaction to Clove when the short seller, when the Hindenburg report came out, and I thought that they would recover much, much faster from that, and they're still continuing to suffer pretty grievously from that hit, and that was in February that happened. And so, like I said, it just doesn't matter if you think that something is out of line or out of whack or not. So, since earnings, we've essentially seen a minus 14% day, followed up by a minus 4.5% day. So, really, really catastrophic reaction to earnings. In my estimation, I would call that pretty catastrophic. In a situation where they didn't come in and, to my mind, say anything crazy. But that's sort of besides the point. Additionally, down here, I'd be looking for sort of like not a great level here. Just kind of trying to give it a little bit of a fresh eye. I mean, this like 11.99 zone, which I know is a few pennies off of where I placed it before. Ultimately, when we're talking about pennies, though, it doesn't really matter. But this grabs this green wick just barely, I think. And what's this say here? Low 12.05. Well, almost grabs it, but it grabs all of these, grabs the body of this one, the body of this one, body of this for resistance. So to me, that could be a space that could provide some support. Again, bullish hope here is that this 14.11 means something. And then on the outside chance that this like 13, 14-ish level, see if I want to adjust that. Yeah, I mean, that pretty well lines up with this high of 13.04. So it's, that might be on the higher end. I'm going to bring this down just a little bit. 13.05. Again, I know these are basically within pennies of what I had before. But it's all eyeballing these things, and they're all zones anyway. So yeah, to me, these are the downside areas that I'd be looking for, and that 14.11 area being the most hopeful, essentially giving it potentially a bounce from where it is at the moment. But we don't have really great indications to that end from, for instance, the MACD. MACD appearing as though it's going to have peeled off all of its bullish momentum. And the really challenging part for me on this is we had spent from June 15th, it was when we first picked up bearish momentum, and we couldn't get rid of it until about July 27th. So about 6 weeks it took to peel off that bearish momentum, and then the bullish momentum only lasted a little over 2 weeks. And that, though it was, a little period of gain here, was really nothing compared to the large selling pressure. And I have devastation stuck in my head, so I'll just say it. That was me trying to be like, that feels very hyperbolic, and it does. But this, huge selling pressure that we had endured here after that initial lockup, to just be able to counteract that with a couple of weeks of buying pressure, not the greatest of situations to be in. Now, of course, if you're a longer term holder, and I do have a couple of positions that are long-term positions, you're a little bit more insulated from reactivity to these sorts of things, and or you might even see this as like an obvious buying opportunity if you have kind of a price floor in mind, sort of like, if it's below this, I will buy sort of mentality. But like I keep saying, I prefer to be a short-term and a long-term holder of SoFi, play both ends of the spectrum, but it's just not giving really great buy signals in the short term very frequently. And so that's what I would hope starts to pick up here in the near future as we get past some of this now earnings sell-off pressure that then has very quickly rolled into lockup sell-off pressure. And everything right now is situated above the price action. So the 20 MA and the 50 MA basically providing additional resistance levels above, but the price action is so far from them at the moment that they're not going to get any support anytime soon. So not really a big factor at this point. Now, RSI, to the degree to which getting into oversold means anything, I mean, I guess throughout all of this selling off, it didn't really get into oversold until about, these areas. And even then, it was just sort of resting on oversold. So I'm hoping that because this run-up period was so brief, we can very quickly get to oversold at this point, being that we had a minus 14 and a minus almost 5% day already endured since earnings, that we can just get ourselves to oversold if that helps assist with kicking up some bullish momentum and getting ourselves off of, or at least establishing a floor and moving forward. That would be my hope from the charting side of things. Now, if we do want to try to grab some initial targets to the upside, I'm not going to go crazy with these things because they have I don't know how I don't know how long it will take us to get back to 1502, for example, but there will be plenty of time to chart these things if and when we start to have something that looks more like a sustained recovery, and that we would even be interacting with price points to the upside. Those would be my initial areas that I'd look for recovery zones, 1502 and then 1629, and then would worry about it from that point forward. But for the time being, I'm really going to be looking to see if this MACD has any hope of shaking off this turn into bearish momentum. I would be kind of sad if we get this bearish crossover, because we waited and worked and watched so hard and alerted to this bullish crossover as such a good sign leading up to earnings. And we had the ability at that time to ride a little bit of a wave up and grab a few gains along the way. But all told, it will have been pretty short-lived. And now if we get a true bearish crossover, I mean, to me, the only saving grace there is that we are already below the baseline. So I don't know how far down it would run, but it feels like a bit in uncharted territory because there aren't a bunch of supply and demand zones that sit in previous price action below this area where we are right now. And because this feels like such an overreaction to me, it's also hard to try to quantify where this could be going based on that type of reaction as well. So kind of hard to say, to be honest, but I'm just kind of taking it day by day and seeing what happens from this point on. Now, let's flip over here. Now, I'm not actually going to go through this, but this is just to say I watched this interview. I didn't stop it at this 1528 mark. This was just me realizing like, oh, I should pull it up so folks know what I'm talking about. But I had, I guess, watcher of the videos, I assume, named Michael, and our friend Wayne, who had done the legwork to call investor relations. Michael had emailed this to me and said, hey, did you see this? And Wayne, a day or two later, had actually texted me and said, did you see this? So folks have been really interested in this video. I watched it. My general takeaway from it was a couple of things. One, I was a bit more pleased here with how Anthony Noto comes across versus the earnings call. I felt like he came across better in this sort of setting. I don't know if it's because it's a video interview and it just seems like his personality comes through a little bit more, and I feel like it's more relatable. That's just a very sort of like not grounded in business type of thing, but that's just a reaction that I have in terms of like him going out there and being the face. I did kind of wish that he would work on, and this may get better over time, streamlining some of these talking points, because I do sometimes still get the sense that it's challenging. It could be challenging for folks to follow as we're trying to bring more folks in to SoFi. It could be challenging for those folks to kind of get the full grasp of what he's saying and then decide to come in. I wish that there was a little bit lower barrier to entry, and that there was just a more streamlined pitch that would appeal to people who aren't as familiar with SoFi as we are, because we talk about it every single day. This feels sort of more geared toward the folks who know a bit about what he's talking about with Galileo and with the bank charter and with, the ability to provide people loans based on deposits that are FDIC insured, and the benefits of that, and the benefits of cross-selling, and that bringing down the cost of customer acquisition and that sort of thing. So I would hope that he can sort of get a version of that that's a little smoother going forward. But that said, the overall sentiment that I had after watching this was, if he, like investor relations seemed to indicate, if he's going to go have a bunch of post-earnings call engagements, communication efforts, sort of roadshow type efforts, to try to get institutions to come in, hopefully to try to boost membership and retail investorship as well, I would be very happy to see this over and over and over again. Ultimately, I think him in this type of setting is a big win. Those other 2 points are just sort of like, I hope that they improve, but honestly, if this just happened over and over and over again, I still think it would be a big improvement from what folks would have gotten purely from the earnings call, and or what they get just from, the really weird / clickbaity / oftentimes garbage articles that get published day over day over day, trying to sway people one way or another on SoFi. So I would be very happy if he just did this, and ultimately it gave me some hope that his efforts following earnings and trying to publicize a bunch of these things could go a long way with at least stabilizing the price and then giving it a place from which to grow. So that's my take. Watch that video if you want. Just pop this in. And I don't know Jonah. I hadn't ever watched anything from him previously, but he's clearly very well versed on SoFi, very interested. So thanks to Jonah for doing this. Pretty awesome to have the opportunity to do that. Now, quickly checking in here, at this point, the analyst ratings are, giving us over 83% of upside. I would be on the lookout in the coming days for a few things. One, additional analysts coming in and what they're going to, the rating that they're going to give SoFi, who knows, and also the price target, who knows. Be a little bit hard to see somebody coming in with a very low rating at this point. A very low price target at this point, given what the stock has gone through recently. Maybe you would get someone, but my general sense from the earnings call and whatnot was that the analysts were actually quite interested and intrigued and pleased with much of what came out of that with SoFi. So I'd be looking for some pretty solid price targets coming out. So I don't know if they'll be as high as the ones that we had previously. We may also see them coming in and adjusting their price targets. I don't know, but I would just be on the lookout for those in case those additionally drive any activity in the stock. I actually didn't see these that had come up, so we'll take a look and see what those are. Those are on the Edgar site. Take a look. But also, just to recap, because I feel like this comes up periodically, there is very, very low short interest in SoFi. This looks like a crazy change up. This is an estimate from Ortex for today only, but even this would just bring us to about 4% of the free float being shorted. Now, as I had mentioned before, I will continue to keep an eye on this, because as this approaches 10, then it starts to become potentially significant. And like I've said before, short sellers seem to have really stuck to Chamath stocks previously. And so for whatever reason that is, something that we're exploring in this Weird World series, which I'll have the next part coming out soon. So I don't put it beyond them at all, but this is just to say, if you see folks coming in right now and saying that there's like this crazy short pressure and there's potential for short squeeze and that sort of thing, it's definitely not there at the moment from what I can see. At least from what Ortex is reporting here, this does not scream that to me. Also, the utilization is very, very low, so there's a bunch more pressure that could come in. But just wanted to bring that up because I still see it places. Now, let's get into what we had talked about previously, talking about where the institutions. Now, this previously reporting under 2%. There's varied, if we look at the previous varied numbers that we had 2% here, and these were all snapshots, had all been taken on the same day. 2.28% there, and so we just get these like different numbers. It's just a common thing that we tend to deal with. But this is the same site as we saw there. This is now bumped up to 2.16. Now I don't know how quickly this is being updated. It's a little bit weird because this is updated as of 8/16, so that's today, with the actual filings that have come in, and shows you who has been doing what. And so we don't see a ton of like crazy buys as a percentage of the portfolio. We do, as we come down, see some that are more significant. See 12 million shares here. See 4 million here, which isn't a lot, but in terms of like that portfolio, it is, and it's sort of reflective of that one that we had pointed out here from Liberty Street Advisors, was in that PDF that had come in on the 5th. So they're potentially down quite a bit at the moment, but we do see it kicking up. Now, the one that's really interesting to me, again, if it's updated and correct, I don't know exactly how this would be off, unless it's like off by a decimal point. We see here 2.16, but then if we go to a NASDAQ site, they have 28.66% institutional ownership. And if we look back here when this was done, which was 10 days ago, this screenshot is from NASDAQ as well. And at that point, they had 2.28%. So, you know, oops, sorry, forgot what I was on here. The degree to which that is correct, that's really interesting to me. And that does feel a little bit more reflective of the order flow that we've seen in the recent days coming in, because this is only showing me the last 5 days of the current 5-day span. But previous to this, we saw additional large-scale orders coming in to the plus side. So that seems like that could track to me. But I mean, that's a huge increase if that's the case. That could be 10x or so, institutional holdership coming in, which would be really, really great to see. Now, the price isn't being reflected in that at the moment. Again, that could be partly attributed to dark pool activity. But we see increased positions here, and 109 new positions, 39 sold outs, whereas previously we had 99 and 61. So, these numbers are quite different from what we saw about 10 days ago. And so I'm sort of interested to know what is correct. But definitely institutional ownership seems to be on the rise. Whether or not it's really like 10x or just a smaller percentage point like we saw here, that's sort of the question at the moment. But these things will obviously sort themselves out over time. It's just one of the many places in which there's this unfortunate lag in reporting that retail has to deal with. So even though we have places that we know that we can go to accumulate the information, how out of date that information is by the time we get it, and how soon it will be updated and then reflect the reality that we are dealing with at that moment, that's always the question, and that's always the challenge. So we'll see, but these are the things that I'm going to be looking for the time being, and hopeful that Noto, his post-earnings activity and communications really help bolster, not just on the institutional side, but still hopeful that the institutions continue to come in, and that this sell-off from this lockup and this, hangover from earnings doesn't last much longer, and that we find ourselves a floor, and that we can have some better days ahead. But we'll be here every trading day to try to sort through it, and we'll have some other additional deeper dives into different areas of SoFi coming out, like Weird World Part 3. So catch up on Part 1 and Part 2 if you haven't yet. And I guess that'll do it for this one. I certainly appreciate you watching, as always, and sharing and all the stuff that you do. It definitely means a lot, and it goes a long way on my end as well. All right, folks, well, I hope your trading week got off to a good start, and I will see you in the next video.